So if you've been tuning into the live streams as of late, you've heard me introduce and narrate the idea of wholesale as a key mechanism within the financial markets. Wholesale is actually a function of every market. Most people are more familiar with wholesale in terms of like a retail store, where a retail store is usually the middleman to the consumer and the manufacturer. For their service or for their connection to the consumer, they're able to purchase the products from the manufacturers at a discount known as the wholesale price, right? Now, wholesale for the financial markets get the same discount by way of the spread, and the product they facilitate are the orders that the market participants put on the book. Now, that's just a brief overview of what wholesale is and their function in the market. But my purpose of making this video is to give you more clarity on the terms that I use while I'm narrating, narrating wholesale's movement through the charts, that we can witness through the charts at a micro level. So for the rest of this video, I'm gonna go over these terms, I'm gonna break them down, I'm gonna give you examples and all that stuff. So let's just get right into it. Now, as an overview, these are the key terms that I will discuss in this video. So again, I'm clearly defining these terms so you know exactly what I mean as I narrate during the live streams. And I won't need to waste time giving a definition every time I use a term in the moment, right? So you will always have this video as a reference. So go ahead and bookmark this or do whatever you got to do so you know exactly what I'm talking about. You have this as a reference, right? So here are the terms right here. We got supply, we got inventory, we have markup and markdown, and then we have like the different phases of marking up and markdown, which is taking the ladder, the stairs, or the elevator. And then, we have this section that I refer to as setting up the shop or set up shop. And then in some more terms, we have dumping and running, and then budgeting. All right, so these are the key terms that I'm going to go over in this video. So let's go ahead and start with the first one. All right, so one key thing to note here is that these are my terms. I just want to make that clear. Others may have another perspective on the overall concept of wholesale. And on that note, let me go ahead and shout out JJ from Confessions of a Market Maker, or E-Micro Futures. He's the person that I originally heard the concept of wholesale from, broken down in this way. And he'll probably direct you. Actually, I'm gonna go ahead and link another video in the description below where they were talking to the other guy that he got the concept from, and that was an interview where they were talking about wholesale and all that stuff, right? So you can go ahead and check that out. Shout out to JJ, and let's go ahead and keep moving forward, right? And also note that these terms are not to be looked at as something that's perfect. They're just a quick and simple way of identifying what's happening around the wholesale narrative, okay? So inventory is the orders which wholesale receives to match to an opposing buyer or seller to provide liquidity to the market, right? So inventory is actually really easy to identify on the charts, and basically what a lot of people will refer to as inventory is support. Now, of course, all of these is going to be based off of the time frame that you're looking at, but this perspective that we have here, we can see inventory right there, we can see it right there, we can see it right there. We can see inventory also right there. There's some inventory there. There's also some inventory there. Inventory. So all of these points where we have buy pivots are pivots to where we would say that, it's kind of clear that there was some buying that happened in that area to where price proceeded to go higher from that point. These will be considered as inventory. Right, so that's what inventory is. So another key thing to understand about inventory is how it relates to what our actions in the market, what we do, our participation. And this is why, I think wholesale is kind of really important to understand, because we are actually their customer. We're doing business back and forth with them first. So when we place an order through our broker, our orders are picked up by a wholesaler that matches it to the other side, right? So there's more to it, but that's the basic components of it. That's all you really need to know, right? So also another way that you may be familiar with inventory as a demand zone, right? People will refer to it as demand. So demand and inventory is often used interchangeably, but they are really separate terms, right? So think of the demand as like the verb and inventory as the noun or what is being facilitated by the demand, right? So wholesale will use the demand at certain price points in a certain price range to build their inventory. All right, so moving on. Now, we got inventory. As soon as wholesale grabs that inventory and they're ready to sell it, it actually becomes supply, right? So supply for us, by the way that I'm looking at it, is going to be the opposite of that, the sell pivot points, right? So every time we see price turn around on the sell side, or when price turns around and goes down, right? So for simple terms, that will be an identification for supply, right? So this is what I mean by supply. Again, another really simple thing to understand. We're looking for the pivot that are taking us back to lower prices. And this happens back and forth all throughout the market. We have our inventory, that's a constant movement within the market, and we have our supply, which is a constant movement within the market. These things happen all day, every day, right? So now that we understand what supply and inventory is, now we can talk about markup. All right, so for markup, let me go ahead and move on over. And let me find a different point so we can make this clear. All right, so we have this inventory zone here. You can see where there's pretty much a base or a floor to where wholesale is picking up inventory. And just to get the other side of that, we also have our supply zone here, right? And I'll refer to these as supply inventory range or zone, or supply range or zone, right? So we get that. All right, so we see we have a constant level or a constant zone or a constant range to where we're picking up inventory. Once that inventory is lifted to a new level, that will be considered as markup. So we've marked up inventory. So we've had inventory down here, and then we left that area and we marked it up. All right, so we marked it up there, and then we went and found lower inventory, or we found inventory at lower prices. So that will be a markdown, right? And then we came back up and we found inventory again at a higher price as a markup, right? So another way that you would hear this, you would hear this referred to as the support for a channel, right? But I'm not just talking about this as the picture that has been painted. I'm talking about the action that took place to paint the picture, right? So we can see this, and visually you could call this an ascending channel, because you see you were making higher highs and higher lows, so you had this ascending channel. So that's a lot of words to explain simply that we have this ascending channel, and what created the ascending channel was wholesale marking up their inventory prices, right, as well as marking up the supply price. So we had supply here, and then we started finding supply at higher prices, so we were marking up supply as well. So usually what I'll do is I just focus on one side, and that's the side that I'm mostly trading from. Or if prices ascending, I will say, they're marking up inventory no matter what my trade bias is. And if price is descending, I will say they're marking down supply, or I may even say they're marking down inventory. But we understand what I'm saying at this point, right? So it's pretty clear to understand. So let's go ahead and move on. All right, so for the next part, what we're going to focus on, we're going to take a step back. We're going to talk about this little area right here, okay? So what we're talking about now is we're talking about setting up shop, right? So again, I'm talking about a range here. So to use the normal terms that we're used to hearing is, okay, we found this range or this area of consolidation. So what I call it in terms of wholesale, because I want to stay inside of the wholesale, the energy of wholesale. The energy of wholesale is functioning in the market so that we can stay in that narrative, so we understand what's going on at all times, right? So once we have these levels that we have identified and we're sticking to for inventory and supply, I'm referring to that as setting up shop. So this is a really simple one to understand. I'm kind of over explaining it at this point, just to make sure it's clear that really setting up shop is a point of consolidation, as you would, probably more familiar with. We're sticking to the same inventory and supply zones, right? So this is what setting up shop looks like. And then, once we break out of that, then we can start marking up inventory, right? Or marking up supply. We can start our markup and our markdown phases, right? Once we break outside of the shop. So that is one way of looking at a shop. Now, another thing with these shops is sometimes you can have smaller shops inside of bigger shops. So kind of think of these like little kiosks inside of a bigger store. Let's just say you got a big retail store, and inside of that big retail store, you will have an outside entity that'll come in and they'll set up a kiosk to sell their products within that shop, right? Within the bigger retail store, right? Or you can also think of it as another section inside of the bigger retail store. So like if you go to like the Best Buy, Best Buy, they have all the products and stuff they sell inside of Best Buy, but then on the side they may have an exchange area to where you have some special things that you go to that counter for, not necessarily to buy and sell things, but you're still facilitating transactions at this little section, right? So getting back to the chart, let's say right here, and these don't happen that often, but they do happen. You have this bigger perspective here to where you kind of set up shop, at these points here, right? Now, smaller than that, you also have smaller shops inside of that. So you see we kind of built some inventory there. We kept the same supply here. Then we got another one. We got some supply there and off of this inventory zone there, right? So you can have smaller shops inside of bigger shops, but typically price will find a range and it'll keep moving out. So once it's done with that range, it'll trend or it'll go into a markup and markdown phase. Sometimes, most of the time, they'll set up shop, and then once they're done with that shop, they'll go into a markup and markdown phase, and then they'll go back into another shop. But on some occasions, they will, just kind of set up smaller shops inside of a bigger shop. So we'll have this bigger shop here, and then we'll transact back and forth inside of smaller shops inside of the bigger shop, right? All right. So again, I'm over explaining this just to try to make sure it's as clear as it can possibly be. Again, if you have questions, just go ahead and leave that in the comments below. But that is what I mean by setting up shop. All right, so now that we understand markup and markdown and the shop and all of that stuff, let's go into how we move in and out of these areas. And what I'm going to talk about in this next section is more so around like the momentum and the volatility in which they move price around or which they conduct their business, right? And keep that term in mind for later. We're going to talk about that in a later section, but how we conduct our business in terms of how we go about seeking out inventory and then letting that inventory go as supply. There are 3 terms that I use to identify this. All right, so these are terms of movement, and the first term that I'm going to talk about is we're going to talk about taking the stairs. Taking the stairs more or less just mean like price is trending. That's all it really means, okay? And it's a certain way that the price prints in a stair-stepping manner. Let me get a good example. Let me find a really good example. So you can see how they were moving up price here. And the way that they were doing this is you was making higher highs. They was consolidating a little bit. And then you made another higher high. Then we consolidated a little bit. So price is trending here, but it's trending in sort of a stair-stepping manner, right? And that's one perspective. That's kind of the bigger picture. If you wanted to look at it at a smaller scale, you could also kind of look at, I would point out this area here as taking the stairs. Again, this is a bullish pattern that I'm going to point out. This is a bullish trend. You kind of look at this as taking the stairs as well. You see, we broke out, consolidated, broke out, consolidated up here, and then we broke out again. We set up shop right there for a brief moment, and then we broke out again, which is going to take us to a next one where this is more of a momentum identification. I call it taking the elevator. So where we have this momentum that, price wasn't really moving. It wasn't that volatile. It was just, they were just conducting business, moving price up and down. And then, all of a sudden we picked up momentum, picked up volatility, and price moved quickly from here after it broke out. Now, taking the elevator is usually a function that happens following a breakout. So anytime that we have strong momentum coming out of a period of a consolidation or coming out of a shop. Now, here's the caveat to it. It can also happen within a shop. And let me see if I can find one that happened within a shop. So we can kind of look at this area back here that I identified as a shop before. And let's just take this shop right here. And there's our inventory. Inside of this, we took the inventory down here, right? So this little area right here, we were chopping around, then all of a sudden we picked up some momentum, and then it happened again there. So we just really started, dumping our supply, letting go of supply until we came back to our bigger inventory zone, right? And it happened on the inverse right here as we went and started releasing our supply, going back to our main supply point, and we started picking up some inventory back up here. And then one more time we took the elevator back to our next little, so inside of, see, these are ways of traveling from shop to shop basically. So either you're going to take the stairs, you're going to take the elevator, as we see here. So you can really look at this as a mall where we went to, I don't know, we went to Foot Locker right there, and then we took the elevator, hung around in the food court for a minute, went back inside the Foot Locker, or we went to another shop there, and then we took the elevator again, then we went to, let's go with Sears, right? And then then we took the elevator, we went on up to Macy's, and then we kind of took a quick little elevator there, hung out at a food spot real quick, grabbed some little snacks or whatever, and then we came back inside of the shop here. You get the picture, right? So we got taking the stairs, you can take the elevator. Now the next one, which is one of my favorites, is taking a ladder, and you see this a lot. Now these terms are actually going to be easy to identify as price action, where you're watching this print in real time. Looking at this in hindsight, it doesn't have the same effect. So, but now we understand what I'm talking about. And see, the reason why I mentioned that is because taking a ladder is a function that's easier to see in real time, and usually it's something that signals a reverse. So here you go. Here's one that signals for a reversal. So you see we took the elevator and then we kind of slowed down, right? So we had this momentum and then we slowed down and price was just chopping around up here. It's a slowdown in momentum, right? So that's one example right there where we were taking a ladder. And there was one back here where we kind of had the same sort of action, to where we had some momentum that came out right there. Then we slowed down, we were chopping around, and it's really choppy price action. And they printed it to kind of make it look like they were going to set up the reversal, but they only used that to squeeze and take the elevator to the next level, right? Now that's one perspective, but if you zoom out, we actually did get the reversal. They squeezed out the sellers that came in right there that jumped in too soon, and then they actually gave the reversal, right? So this was a signal that actually did result in a reversal. They wanted to release some more inventory as supply before they actually gave us the reversal, right? So I hope that clears up what I mean when I refer to taking the stairs versus taking the elevator versus taking the ladder. And like I said, these terms make more sense when you're actually watching the price print in real time. You can see the energy of the market. You can see, what's going on live in real time, right? All right. So enough of that section. Let's go ahead and move to the last part of this, which we're going to talk about budgeting. But before we go into budgeting, I do want to go back and provide a little bit of clarity to a term that I realized I used before, which is dumping, and the inverse of that would kind of be running, right? So when we're dumping, it basically is taking the elevator, and it's when we have supply that we are just, we're letting go and we're seeking value at lower prices, right? So that would be dumping. So dumping is a selling term that I would typically use. Now, sometimes I may even say dumping when we're running, or when price is trending upward with momentum and volatility. I may even say we're dumping supply, because that can also be looked at as dumping supply, but I'm usually referring to a sell-off when I mention dumping supply. So here we had a strong sell-off. I could refer to this as dumping supply. Again, in real time, depending on how this played out, if this happened slowly and we just slowly transacted lower, even though in hindsight it looks like a strong selling point, for it to actually be dumping, this would need to happen in real time quickly with momentum, right? So it's something that's easier to understand in real time. All right, so let's go ahead and move on to budgeting. All right, so remember, there was an idea or a concept that I told you to hold on to earlier in this video, which is they're conducting business, right? So remember, we're doing all of this. Wholesale is doing all of this, not just for the sheer fun of manipulating a market and screwing you over. This is their business. So they have a business just like we have a business of trading and trying to earn profits from the movement of price within a given trading session, right? So wholesale, they conduct their business by facilitating those orders, serving as the middleman for the orders that we put into the market, right? And they make money on the spread. That's them conducting their business, right? So they have to go out and they have to buy this inventory or these orders that we place on the books. Now, how they go about doing that is another video for another day, because I don't want to make this video too long and it's going to take time to me to actually go into detail and really explain it, because you have to sort of think in the reverse in a way. So I'm not even gonna go into detail about that specifically, but just understand that they're making money on the spread. Now, in order to be able to buy these orders that are on the books, they need capital to do that. Just like we need capital to be able to purchase our contracts, or if we're trading stocks, to purchase our shares, right? They need capital to be able to purchase the orders from the books and to be able to make the money on the spread. So as soon as they take the other side, they're in it at a loss, right? And so they need to move price around in a way that they can cover that loss and make money in the long term. So what you will see is they have to rebalance their books, and they rebalance their books in a way where they are collecting inventory, letting it go of supply, collecting inventory, letting it go of supply, collecting inventory, letting it go of supply, until they have their books balanced in a way that they can actually move price to the next shop, right? So that's what they're doing when they're budgeting. So when I mean that they're budgeting, really they're holding price in a range, and they're just moving inventory in and out of their warehouse. Okay, so anytime that they collect inventory, it goes into their warehouse as supply. They release it, they sell it to the other side as supply, and then they bring price back they'll go back and collect some more inventory, and they'll keep doing that for a period of time until their books are balanced, right? And they have the budget to move to the next shop, whether that's up or down, right? Budgeting is what a lot of people will refer to as choppy price action. A lot of times that is, wholesale, budgeting. They're in that budgeting phase. This could be looked at as a budgeting phase because they're moving inventory in and out of their warehouse within a relatively tight range. And so this is the reason why they would set up shop in the first place, is so that they can have the budget, right? They can balance their books and they can have the budget to be able to move to the next shop. So again, this is just the same as all markets. It's no different. So think about if you have a retail store. Let's make it a small mom and pop store, and the region that they have their brick and mortar store in, the traffic in the area is kind of slowing down and it's moving to another side of town. So they can't just pick up and leave if they don't have any, capital to. It actually takes money to move, right? If you're moving to another house or another apartment, you actually need money to move. It costs money to move your goods and to move yourself even to that new location. So they got to make sure that they have enough money to move to this next location, buy more inventory, set up shop, and facilitate with their customers before, until it's time to move again, right? So back to our wholesaler. Our wholesaler, again, is budgeting, moving inventory in and out so they have enough capital to go to the next shop, okay? So again, I'll over explain that to try to make it as clear as possible, but that is budgeting. All right, so now you should have a decent understanding of what wholesale is actually, and the terms that I use when I'm describing wholesale and when I'm narrating wholesale in real time, right? Okay, so again, wholesale is one of my favorite things or concepts to follow. It completely simplified what I was looking at, and it gives me a better sense of what's going on so I can stay consistent to my plan, right? And, from my observation, anxiety is one of the key reasons traders fail. I think understanding this concept directly deals with that anxiety, directly addressing the fear of the unknown, which leads to that anxiety, right? And fear comes from the unknown, not knowing what's going to happen, not understanding exactly the environment that you're in. That creates fear, which feeds that anxiety, right? So anyway, now you should be clear on what I'm referring to when I use these terms in the future. Make sure you go ahead and bookmark this or save it in your favorite playlist, or whatever you do to make it easy for you to reference in the future. And if I ever need to update these terms for whatever reason, I'll make a new video on that term that I'm updating specifically, and then I'll also point back to this as the general reference point for these wholesale terms that I'm using during the live streams, or whenever I'm narrating it, right? And as usual, leave your questions and thoughts in the comment section below. Hope you find this helpful. See y'all on the next one. Trade it easy.